In this video, I am going to discuss about variable and fixed cost. Based on the relationship with number of outputs, cost can be divided as follows: variable cost or fixed cost. Let's discuss about the variable cost first. Variable costs are expenses that vary in proportion to the level of production or the amount of goods or services produced. This is very important. Variable cost changes based on the level of production, not the level of sales unit. This is really important. Remember that this does not changes based on the number of sales units. Variable cost changes based on the level of production units. They change based on the volume of production and are typically directly tied to the production process. Variable costs can be direct or overhead costs. We discussed about the direct cost and the overhead cost in the previous video. Typically, variable costs are direct costs, and there are some instances where variable costs can be overhead costs as well. These are the common examples for variable costs: raw materials and supplies, labor costs for hourly workers, fuel and energy costs for production machinery. Let's do this example. Company X produces product A, which uses material Z. One unit of product A uses 1.5 kilograms of material Z. Cost of 1 kilogram of material Z is $12. What is the total variable cost if the company produces 30 units? Now let's calculate. Total variable cost is equal to, they are going to produce 30 units and one unit uses 1.5 kilograms of material Z, and the cost of 1 kilogram of material Z is $12. So the total variable cost is $540. This is the total variable cost. This is the total variable cost graph. This is really important. As you can see, y-axis depicts the cost, whereas the x-axis depicts the number of production units. As you can see, variable cost curve starts from the zero, which means when the number of production units is equal to zero, the total variable cost will be also equal to zero. And then as the number of production unit increases, the total variable cost will also increase. As the number of production unit decreases, the total variable cost will also decrease. These are the characteristics of the total variable cost curve. Even though this is a straight line, in reality this will be a curve. So you have to have understanding of the characteristics of the total variable cost curve. And now let's discuss about the variable cost per unit curve. Earlier we discussed about the total variable cost curve, which is this. Now let's discuss about the variable cost per unit curve. This is the variable cost per unit curve. As you can see, the variable cost per unit is constant for all the number of production units. As you can see, as the number of production unit increases, the variable cost per unit is not changing. It is constant. If the number of production units decreases, still the variable cost per unit is constant. How we can calculate the variable cost per unit? We can calculate the variable cost per unit by dividing the total variable cost by the number of production units. This is how we can calculate it. These two graphs are really important. Have a good understanding about the characteristics of each graph. Now let's discuss about the fixed cost. Fixed costs are expenses that do not change with an increase or decrease in the amount of goods or services produced. This is the opposite of variable cost. Now the cost is not changing based on the increase or decrease of the amount of goods or services produced, which means this cost is constant. They remain constant regardless of the level of production. Fixed costs are overheads. Typically, fixed costs are overhead, meaning these are not direct costs. For examples, rent for a factory or office space, salaries for full-time employees. These are fixed costs because these costs will be incurred whether the business producing goods or services or not. Now let's do this example. Company A manufactures cars. The rent for the factory is $200,000 a month. What will be the cost of rent if the company produces 20 cars in a month and 0 cars in a month? As now we know, fixed cost does not change with the level of output. So when the company produces 20 cars, the rent for the factory will be 200,000. And what will be the cost of rent when the company produces 0 cars? Still, they have to pay $200,000 because fixed cost does not change based on the number of production units. This is the total fixed cost graph. As you can see, this is the total fixed cost curve. Even though the number of production unit increases or decreases, the fixed cost is not changing. It is constant. This is the main characteristic of the total fixed cost curve. And this is the fixed cost per unit graph. As you can see, this is the fixed cost per unit curve. Fixed cost per unit will decrease as the number of production unit increases. This is because the fixed cost will be distributed among the number of production units. As the production unit increases, the fixed cost per unit will decrease. This is how we can calculate the fixed cost per unit. This is equal to total fixed cost divided by the number of production units. This means the number of production units and the fixed cost per unit negatively related. When the number of production unit increases, the fixed cost per unit will decrease. When the number of production unit decreases, the fixed cost per unit will increase. Now let's discuss about the total cost. Total cost refers to the sum of all costs incurred in producing and selling a product or providing a service. It can be calculated by adding up both fixed costs and variable costs. This is the formula to calculate the total cost. Total cost is equal to fixed cost plus the variable cost. This is the variable cost. How we can calculate the total variable cost is that variable cost per unit multiplied by the quantity of production. Now let's do this example. For a month, fixed cost is $2,000 and the variable cost per unit is $2. 1000 units produced. What is the total cost? So the total cost is equal to total fixed cost plus total variable cost. Total fixed cost is $2,000 plus the total variable cost is equal to 2 multiplied by 1000, which is equal to $4,000. As you can see, now we can combine the total variable cost curve and the total fixed cost curve, which will give us the total cost curve. This graph is really important. As you can see, this red line, which is the total cost line, starts from the fixed cost amount, which is $2,000. And this line is parallel to the variable cost line. These two are the main characteristics of the total cost curve, which means the total cost curve will start from the fixed cost amount and it will be parallel to the total variable cost curve. Now let's discuss about the stepped fixed cost. We discussed about the fixed cost earlier. Now let's discuss about another variation of the fixed cost, which is stepped fixed cost. A stepped fixed cost is a type of fixed cost that remains constant within a certain level of activity but increases or decreases at various intervals as activity levels move to the next level. A step fixed cost is a fixed cost that is incurred in steps or increments rather than in a continuous manner. Let's do this example so you can understand what is step fixed cost. For a month, fixed cost is $2,000 and the variable cost per unit is $2 to produce up to 1000 units. If the company wants to produce more than 1000 units in a month, they have to rent out a new facility because the current facility only has the capacity to produce 1000 units. New facility will cost $500 a month. What is the total fixed cost if 1750 units produced in a month? So now there is a stepped fixed cost, which means if the company wants to produce more than 1000 units, they have to rent out a new facility, which means for the first 1000 units, they can use the current facility, which will cost them $2,000 a month. Now they are going to produce 1750. So for the next 750 units, they have to rent out a new facility, which will cost $500 a month. So the total fixed cost to produce 1750 units will be 2500. This $500 cost is for the new facility. This does not mean if the company wants to produce more than 1000, they have to abandon the current facility. That is not correct. They are still using the current facility to produce 1000 units, and any number of units after the 1000 units they will use the new facility. So they will have to pay two facilities, 2000 for the current facility and 500 for the new facility. Now you can understand what happened earlier. As you can see, up to 1000 units, they only had to pay $2,000 as the fixed cost. If they want to produce more than 1000, they had to rent out a new facility, which will cost them $500. So this difference is the $500. So now the new total fixed cost is $2,500. Let's say if they want to produce more than 2000, they have to purchase a new machine. Let's say it will cost $1,000. So now the total fixed cost will be $3,500. As you can see, these fixed costs are fixed within the range. Within the range of 0 and 1000, the fixed cost is constant. Within the range of 1000 and 2000, the fixed cost is fixed. Within the range of 2000 and 3000, the fixed cost is fixed. But overall, the fixed cost is changing. This is the stepped fixed cost scenario. Now let's discuss about the semi-variable cost. This is also known as the semi-fixed cost. A semi-variable cost, also known as mixed cost, is a cost that includes both fixed and variable components. These costs have a fixed portion that remains constant over a certain level of activity and a variable portion that changes with the level of activity. This basically means these costs include variable cost portion and a fixed cost portion. These are the most common examples for semi-variable costs: water bill, electricity bill, telephone bills. This is because all these bills contain fixed cost amount, which is known as the rental amount, which means whether you use this service or not, you still have to pay this fixed cost amount. Based on the usage, they will charge you a variable cost. So the total cost of the bill will include fixed cost amount and a variable cost amount. This is how we can illustrate the semi-variable cost. There are two types. This is the first type. This is the second type. If you can remember, we discussed about the first type earlier. This is the graph for total cost. Now the total cost can be considered as the semi-variable cost because both these costs include fixed cost portion and a variable cost portion. So now you can understand the semi-variable cost curve here, which is the combination of total variable cost and the total fixed cost. It starts from the fixed cost amount and parallel to the variable cost curve. Now let's discuss about the second type, which is this. This is bit different. As you can see, now the semi-variable cost or the total cost curve starts from in the middle. What is the reason for that? This is because 0 to 10 there is no variable cost, which means the total cost starts from here. Let me give you an example. Most of the telecommunication companies will allow you to use some number of units free of charge. Let's say the first 10 units free of charge, meaning you don't have to pay for the first 10 units. As you can see, this is why there are no variable cost between 0 and 10. They have allowed you to use the first 10 units free of charge. After the first 10 units, they will start to charge you for the usage. This is why the total cost is starting from here. Now, as you use their service, you have to pay the variable cost plus the fixed cost. This is also a type of semi-variable cost. Thank you for watching. See you in the next video.